Hey, what's going on? Jeff Bostic from the Bostic team at Rate. Hope you're having a great start to your week and happy President's Day. First and foremost, we just want to congratulate all of the Circle of Excellence winners from 2024. Last year was a challenging year. You pushed through and you just rose above. So kudos to you, soak it up. And from what we're hearing, 2025 is off to a fast start for many of you. So can't wait to see what this year brings as well. Moving on to what news affected the market last week. We had some big inflation reports. We had CPI with the Consumer Price Index on Wednesday, kind of leading the charge. That surprised to the high side, and the big news there were a couple things. Energy and food costs are up, as you probably know and have seen, but one of the big things that we thought we'd make headway with were replacement costs, because every month a new report comes off, one drops off from the prior year. So we thought the January 2024 reading was dropping off. That was a really high number. We thought that drop off was going to bring, it didn't matter what the new number was on, it was going to be lower than what last year came in at. Unfortunately, January 2024's number was revised lower. So when the 2025 number comes in, it didn't replace as big of a number as we were anticipating. So that was shocked, didn't see that coming. And so the numbers actually went up. That took the market up. We saw rates take a jump on Wednesday. However, on Tuesday, the producer price index came in, and that is the wholesale measure of inflation. Now, it echoed a lot of the same things from Wednesday. It was still hotter than expected on the headline reading. It was in line with expectations on the core reading, but the market reacted favorably because there are two components of that also are shared with the personal consumption expenditure report. That is the Fed's favorite measure of inflation, and that comes out in about a week and a half. Those two measures were passenger airline services as well as healthcare costs were showing to be coming down. Now they have a higher weighting in the next report, so that gave the market some reason to think, oh, that next report might actually show inflation coming down, and if so, that could be positive news for just the outlook of the market for the year. So the market liked that, rates came down. Then on Friday, we followed that up with a very weak retail sales report. That was just far and away below any kind of expectation. So the market continued to rally. It looks like there might be some weakness in the consumer with credit card debt at an all-time high, actually 41% higher than what it was pre-COVID times. Then it came down with some stimulus packages, and now it just has come roaring back. And not sure where that's going to top out, but if retail sales are down, maybe the consumer is being stretched a little bit. Overall, a roller coaster of a week. We saw rates up on Wednesday, down on Thursday, and down further on Friday, ending the week with the lowest numbers that we've seen for 2025. That is a 30-year fix for a perfect credit score client of 780 or better, putting 25% down, is now at 6.96%, under 7, and hope that trajectory continues. So as always, we will keep you posted with any news that affects the financial markets. Make it a great week. We'll see you next week.